Shares of Tesla are down 12% on Wednesday after earnings were reported on Tuesday after the market closed. And those of you who follow this channel regularly know that this is really no surprise to me. Tesla has been under pressure from a margin perspective. They've been having to discount their vehicles. They're not able to lower costs at the same rate that they're lowering prices. That means that profitability and free cash flow are moving in the wrong direction. Even as legacy automakers, General Motors reported before the market opened on Tuesday, they raised prices during the second quarter. So I want to dig through exactly what's going on in the company's operations and then highlight what the pivot is that management is making, particularly Elon Musk. I think it's really interesting that over the last few quarters, Musk has doubled down on Tesla not being an auto company, despite the fact that it makes about 90% of its revenue on automobiles. And this is actually an AI and robotics company. But does that actually make sense? They got to a little bit of this on the conference call. If this is an AI company, why in the world is Elon Musk floating the idea of investing Tesla money in his private company XAI? If this is an AI company, why is Tesla giving NVIDIA GPUs that were allocated to Tesla to XAI, which is again Elon Musk's private company? None of this really seems to make sense. And there's one thing that I haven't seen anybody talk about that I'm going to highlight in just a minute. That is the miles driven with FSD. It indicates that the adoption rate of FSD is much, much lower than management would indicate. And maybe the bullish thesis for FSD and FSD supervised is not what management would hope. That's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First, I want to start with a high level look at the numbers. This is the summary, gives you an idea of what profitability looks like. $1.6 billion in operating income, $1.5 billion in net income. Over half of that, about 60% of that actually came from tax credits. So I'll get to that in just a second. But I think that's a really interesting note, is that a huge percentage of Tesla's profitability is now coming from those tax credits that aren't really sustainable long term, but have also lasted a lot longer than I think a lot of us thought. Operating cash flow of $3.6 billion and free cash flow of $1.3 billion. One of the biggest reasons that there was free cash flow in the quarter is Tesla underproduced vehicles. They sold more vehicles than they produced in the quarter. That will help your cash flow short term, but it doesn't change your margin profile. So if we go to the overall look, you can see over here you get the year over year numbers. And this is what I think is really highlighting the weakness at Tesla. Automotive revenue is down 7%. You can see the energy and energy storage revenue was up 100%. I highlighted that when I previewed earnings. We knew that this was going to be a really big number. Very, very subsidized because of the investment tax credit, because of the Inflation Reduction Act. So don't expect a high growth rate in energy storage and high margins in energy storage to last long term, because those subsidies typically get eaten up by competitors. So there will be other competitors that will come into the market, start to undercut a company like Tesla, but they definitely have a lead because they have manufacturing here in the US and are able to take advantage of those credits more quickly than other companies. You can see that operating expenses up 39%, while income from operations down 33%. Adjusted EBITDA margin fell. Basically everything on the bottom line fell. So the trends overall negative. That's not what you want to see from a manufacturing company, especially a company that was supposed to be ramping the Cybertruck. That was the story last year, was that the Cybertruck and advances in FSD were going to help the company's margins and sales. Doesn't seem to be the case. If you go all the way down to statement of operations, they break things down a little bit more. This is what I highlighted earlier, $890 million in automotive regulatory credits. So that's more than they've had in any quarter over the past year. Probably an outlier. They never quite give details on who's paying for this or exactly what the details are, but don't expect this to be something they can count on forever. But $890 million out of $1.5 billion in profit, that's a huge benefit for the company. The auto gross margin was 18.5%. Exclude those credits and the gross margin falls to 14.6%. So it's a pretty low gross margin, and obviously operating margins falling as well. I want to pull back and show the trends for operating cash flow and free cash flow. You can see that since 2022, these are trailing 12-month numbers. The operating cash flow has been declining steadily, now about $11 billion on a trailing 12-month basis. Free cash flow is getting close to being negative. If it wasn't for selling vehicles that were in inventory in the most recent quarter, they would have likely had negative free cash flow again for the second quarter. But the huge shift for Tesla is the narrative shift. Elon Musk said this is an artificial intelligence and robotics company. So he basically said, don't worry about that auto business. Worry more about AI, in particular FSD, and then robotics, which would be the Optimus product. Said that they could sell 20 billion robots given the 8 billion people in the world and then the other robots that would be needed for things like manufacturing. So that's the lofty goal that he has for a product that is not even in the market. We have no idea what demand would be for that product. But this was something that I did want to highlight. This is the cumulative miles for FSD. So FSD version 12, about the last 3 months, there has been about 600 million miles driven with version 12. So what is the adoption rate? How much are people actually using that? That sounds really impressive on the surface. But is it? If we just divide 600 million miles by 3 months, you get 200 million miles per month. And then assume that people are using FSD quite a bit, about 1,000 miles per month for every user. That means that there's about 200,000 people using FSD version 12, the latest version of FSD. In just the last 3 years, Tesla has sold 4.5 million vehicles. So that's only about a 5% take rate of the vehicles that have been sold in the last 3 years. Now, they did make this cutoff and say that this is the vehicles that have the appropriate hardware, but that should be a relatively large number. What I wanted to put in context with this is that analyst estimates that the take rate for FSD is only in the single digits is probably about right. If you just look at the miles that they're disclosing having driven with FSD, it does not translate to millions of people using FSD or even many 100,000. There may be 100, 200, maybe 300,000 people who have even tried FSD on their vehicle. That means that not many people are paying that monthly fee. I think that makes you have to question how much people are actually going to be willing to pay for FSD in the future, even if it is fully autonomous. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So why is the stock dropping like a rock today? I think it's very clear, and investors are starting to realize that the auto business itself is just not the business that was promised a few years ago. You might remember, even going back 5 to 10 years, it was promised that this was going to be a 25% gross margin business, a much higher margin business than traditional automakers. That has not proven to be the case. Competition is what it is in the auto industry. This is the reason it's so difficult to make a profitable auto company, and Tesla has not been particularly profitable compared to other automakers. I want to just show a couple of charts here. This is GM's free cash flow in blue and Tesla's free cash flow in orange. You can see that Tesla really benefited from the shortage in the industry during the pandemic, grew that free cash flow. They actually raised prices in 2021, 2022. Then in late 2022, that was when they started discounting vehicles. You can see that that has decimated their free cash flow. The margins have come down. And this is actually a fairly low margin automaker at this point. It doesn't appear that they've done anything from a manufacturing perspective that is revolutionary. That's something that Tesla has often laughed at competitors, that they're kind of stuck in their old ways. Elon Musk has indicated that they're going to have lower costs. They're going to do things better than competitors. They have better inventory management. That just doesn't seem to be the case based on the numbers that they're reporting in their quarterly filings. I'm not talking about the story. I'm talking about what's actually being reported. So as investors realize that this auto business is not necessarily going to be a massively profitable business, then you have to turn your attention to what is the story that Elon Musk is selling. This is an AI and robotics company. Is it an AI company? Are people adopting FSD? Is there a clear path to what some sort of a robo-taxi looks like? It isn't clear that that's the case either. We're likely multiple years away, and we've seen this from multiple analyst notes today from Wall Street, but we're multiple years away from any sort of full robo-taxi having both the technology and the regulatory approval to actually be on the road. We don't know what that vehicle is going to look like. We will maybe see something on October 10th. That is what Tesla has said. But the current FSD is not a product that is going to be able to be launched to mass markets, despite what Elon Musk said, even on the conference call yesterday. On the robotics side, he said that they could sell 20 billion Optimus robots. We don't even know what those robots would be used for, or how much they would cost, or if there's any demand for them. So I think that just seems a little bit crazy. And there's all kinds of companies that are making crazy things. That is absolutely fine. But here is what investors have to think about. This is the price to sales multiple for Tesla versus General Motors. Tesla has a price to sales multiple of nearly 8. General Motors has a price to sales multiple of 0.3. I mentioned that GM actually has better margins and better free cash flow. So that's why I'm showing this price to sales multiple, because it gives an idea of the premium that investors are paying for a company that is actually less profitable on everything that it makes than GM. So when Elon Musk and people on social media complain about investors not understanding the potential for things like artificial intelligence and robotics, this chart shows that investors are paying a massive, massive premium for artificial intelligence and robotics, products that don't currently exist today. Every once in a while, the market questions, are these products ever actually going to exist? Something that I have talked about a lot on this channel. And then you get a reaction like we see today, where the stock drops like a rock, because there's not actually any there with a lot of these products that have been promised. We've been hearing for almost a decade now that FSD was going to be done by the end of the year. We heard that again yesterday. Count me skeptical, and I don't think that there's any way there's going to be any sort of robo-taxi product on the road in the next few years. But I think that's why the stock is down today. And the question is, do you want to believe in the numbers that we saw yesterday, or do you want to believe the story that Elon Musk is telling? That's really the conflict for investors today, because the numbers are telling us that this is not a great business right now. It doesn't seem like there's any sort of catalyst to improve those margins, to refresh vehicles. Competition continues to come into the market. That's why I think some of these other legacy automakers are much more attractive from an investment perspective. And the story, I'm just not going to buy it until we actually see something in reality, until we actually see a full robotaxi operating with regulatory approval and we get actual safety data instead of these charts, instead of these random charts that Tesla puts out. So that's the tension today. And today, the numbers are winning out. That's why the stock is down. But what do you think about Tesla in the future? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.